Ben ritrovati lunedì mattina sul floor del New York Stock Exchange. Inizia un'altra settimana, in realtà inizia un nuovo trimestre, il quarto trimestre, fondamentale per capire come chiuderà l'anno per la borsa americana. Ne parliamo con il mio ospite qui sul floor, come vedete come ogni lunedì è Kenneth Polcari, che è Managing Director per ICAP Equities. Kenny, thank you so much for being with us.
Thank you for having me. It's always a pleasure. And I missed you for the last 2 weeks.
Oh, I missed you too, and apparently I didn't miss much though. I mean, in the last when I left 2 weeks ago, this S&P 500 was around in the same place where we are now. So what happened?
Now, not a whole lot happened. We did have a little bit of pressure on the market, but we got stuck between the 1425 and 1450 range on the S&P right up to quarter end last Friday. And actually, I think people were a little bit disappointed that the quarter ended kind of on a whimper, that they didn't really push it higher into the bell. But I think, part of that was you had to look at some of the macroeconomic reports the last 2 weeks. They've not been good. It just kind of confirms this not only U.S. slowdown, but this global slowdown. So I think the market almost felt tired by the end of the quarter, It's interesting today that we should be rallying, 15 points on the S&P, which is, 1%, ahead of Wednesday's debate and really ahead of Friday's non-farm payroll number, which is, going to be the next number that everyone's talking about.
So now let's focus on the fourth quarter now. The third quarter, as you were saying, is gone. A very good one, even though the last week has been pretty lackluster. But what can we expect? The third quarter was really pushed higher by QE3 expectation. Right. The fourth quarter, a lot could happen. Of course, the election, it could be a huge catalyst. Right. What do you think?
Well, I think, listen, next week is going to start earnings season, right? And so we're already fairly well prepared that the earnings season is going to be kind of mixed at best, because we heard that at the end of last earnings season that the projections going out were not so robust, right? So the market's already expecting that the earnings are going to be flat to down. We've had a lot of downgrades. We've had a lot of companies, analysts, restating their numbers and bringing them down. And so then what you're going to see is like what we always see is that, companies will announce and then they'll beat the number, right? And people have to remember that they're beating a number that's already been lowered. We saw that in RIM last week, right? The number had been cut drastically and then they beat it, still at a loss, but less of a loss than had been expected, and the stock rallied. And I think that you're going to see more of that this quarter, but I do think that the presidential election, certainly over the next month, the three presidential debates as well as the vice presidential debate is really going to kind of frame what the argument should be. We're hoping to hear much more on the domestic front, job creation, taxes, spending cuts, all that stuff, more so than we're hearing. Not just rhetoric, but actually a definitive plan. And I think the electorate really wants to hear that, needs to hear that in order to cast their vote going forward, right? But I think the market will be held hostage to the headlines, certainly in the U.S. and there, and also the headlines out of Europe. Once again, what we saw the last 2 weeks when you were out was everyone thought kind of Spain and Greece were set aside. Mario Draghi and ECB had come out. And in fact, what we really saw last week especially was that those problems are far from fixed, right? Spain hasn't come to the table yet. Was Greece going to get more money? And in fact, today they did. So that's kind of helping sentiment over there. You saw European markets were all stronger early this morning.
Of course, yeah, Europe is going to be still a huge factor. But going back to the election, you were saying Wednesday we have the first debate. The polls so far, yes, they give like a very, very close, Romney and Obama, but Obama is still ahead. Right. Even though, according to some polls, people are still very skeptic about the economy and how the president is handling the economy. So do you think that, in particular, this Wednesday debate that is going to be on the national themes can really be a game changer?
Here's what I think. I think that Wednesday's debate is going to be all about the U.S. economy, right? People are going to want to hear about taxes and job creation and spending cuts. But I think that there's a sense in the country that Obama is in fact going to get reelected to a second term. Yet, on the congressional side, that the Republicans might have the ability to take control of both houses, the Senate and the House, right? If that ends up being the case, then you're going to have a Democratic president with a Republican House. It'll be his second term. He cannot run for a third term. And so therefore the sense is maybe he'll come more to the middle. Maybe he'll be able to negotiate more with the Republicans. Because listen, he wants to go out with a legacy too, right? He wants to go out as a president that really changed the world and that left the country better than when he came in. And in that situation, I think it would make sense for him. And I think that kind of the feeling in the country is that it might make sense for him if that happens, that he'll come more to the middle. And then maybe, in fact, we will see more definitive programs. We'll see, cuts in spending. We'll see, tax reform. That doesn't necessarily mean tax cuts, because I think in the end it'll become very clear that, you just can't keep cutting, that there's got to be some reform. And if that means that taxes go up for some people, then that's what it means. And I think people are willing to do that as long as they see the plan going ahead. And I think that's really the confusion, is that people don't, it's still so unclear, since they don't know what the plan is. You're not going to raise my taxes if you don't tell me how you're going to spend it, right? Or you don't tell me definitively how you're going to bring in the deficit. And that's what people want to hear.
And so you think that now Wall Street is discounting that scenario, you think? I mean, they are preparing for a second Obama mandate?
Yeah, I think they are. I think the street, and actually, I forget, there was a headline in the Journal today. I think it was some of the big investment banks are preparing investors, big investors, for, in fact, an Obama win. Now, it may be close, and I'm not suggesting that that's all done, but there's a sense, there's much more talk about an Obama win, but a Republican win in the House, in the whole House.
Now, you were mentioning, though, that Obama could just move to the center, but it could also be the case that with the full Republican Congress and a Democratic White House, things could be even more difficult to push ahead.
Well, they could. We could have 4 more years of gridlock. But what I don't think will happen, because you see, where does that really put Obama when you think about it in terms of his legacy, right? Does he want to go out with a legacy that is anything but stellar? I mean, listen, we can just look back in time and look at a couple of presidents that served one term and went out with horrendous legacies. And so he doesn't want that, I don't think. Certainly does not want that. And that's why I think if that happens, that he may look at himself and say, I need, for the good of the country, I need to come more to the center. What's the Democratic Party going to do? Are they going to punish him? He can't run for a 3rd term. At this point, he's done what he's done. And it would make more sense for him, I think, to leave the country better off, certainly, than it was when he came in.
And on the Journal this morning also, they were mentioning that Tim Geithner, if Obama is reelected, it might be one of the first person to go. Right. And probably this could be a good thing for Wall Street. Wall Street will just, could just rally even more on that. Right.
I think so. I think that, he's indicated, and there's been speculation about him not staying through a second Obama presidency term. And so I think that's also kind of discounted. I think people just expect that there's certainly going to be a turnover in the presidential cabinet. And Geithner has certainly been one of those people that has been rumored to be wanting to go. Even, listen, there could be even changes at the top with Hillary Clinton. There's rumors that she doesn't want to stay either, right? That, in fact, so there may be broad changes across the cabinet, and that's not necessarily a bad thing.
Yeah, I was mentioning Geithner just because it's very linked to Wall Street, and of course they want to see something different, probably.
Listen, they've been talking about that. Even Geithner has kind of hinted about, whether or not he really wants to stay, or does he want to get back to the private sector.
Now, very quickly, let's focus on this week. You were mentioning the job numbers coming on Friday. It's going to be a huge catalyst for the market. You were mentioning the YC rally today. Will the rally stand until Friday?
Well, here's what I think is going to happen. 1475 is the high for the year. I think there's a real shot that between now and Friday we could test that limit again. But I think once it gets there, it's going to get exhausted again, and it's going to run into some real resistance. I think 1475 is going to represent the high for the year. I don't think we're going to blast through to 1500 the way some people think we're gonna. So I think we're really stuck between now and the end of the year, between 1425, 1475. I wouldn't be surprised if we actually ended up on the last day of the year right where we are now, right in the 1450 range, because my sense is unless there's a real catalyst, and it's got to be something so significant that's going to cause this change. Now, what could it be? Could it all of a sudden be that they deal with the fiscal cliff issue that's coming on January 1st? That could be a real game changer. If, in fact, they deal with it and Wall Street and the industry and investors embrace what they do, that could certainly be a game changer. I don't see that they're going to be able to do that before year end, because they're only going to have 4 weeks between the election and the end of the year, and then it's really a lame duck Congress because some people are in, some people are out. So are they really going to get it done? And that's the fear. If anything, I think the fear is, I think the concern is to the downside if they don't do something.
Thank you very much, Kenny. Always a pleasure. Thank you.
Bye.
Grazie a voi per l'attenzione, a domani.